The operating framework of Singapore's monetary policy can be summarized by the acronym BBC: Basket, Band, and Crawl. MAS manages the exchange rate against a basket of currencies of our major trading partners, reflecting our diverse trade patterns. For example, in our consumption basket, we may have fruits and vegetables from China, consumer electronic goods from Japan, and so on. As such, it is the value of the Singapore dollar against a trade-weighted basket of currencies that matters. This trade-weighted exchange rate is called the Singapore dollar nominal effective exchange rate. MAS ensures that the exchange rate floats within a target band. The band accommodates short-term fluctuations in the forex markets and provides flexibility in managing the Singapore dollar nominal effective exchange rate. The crawl refers to the rate of appreciation implied by the policy band. This rate of appreciation is reviewed regularly to ensure that it stays consistent with the fundamentals of the economy, as well as to prevent any misalignment in the currency. The formulation of monetary policy involves adjusting some component of the BBC system to ensure that the exchange rate path is aligned with the projected path of economic activity and inflation, and with longer-term fundamentals. To do this, MAS uses three main policy levers: the slope of the policy band, the width of the policy band, and the level at which the policy band is centered. MAS can change the slope of the policy band. The slope of the policy band is changed when MAS assesses that the trajectory of economic activity over the medium-term policy horizon is changing gradually. A positive slope to the band is typically equivalent to a tightening of monetary policy, in the same way that other central banks, such as the U.S. Federal Reserve, tighten monetary policy by raising their policy interest rate. An appreciating trajectory for the Singapore dollar nominal effective exchange rate helps to contain inflationary pressures. In comparison, after the economy experiences a negative shock that results in a lower trajectory of inflation, MAS may ease monetary policy by reducing the rate of appreciation of the policy band. Note that the slope of the policy band has been set as low as 0%. MAS can change the width of the policy band. MAS normally widens the band when global economic developments cause a short-term increase in exchange rate volatility, without necessarily changing the projected path of economic activity and prices. This happens when there is a significant increase in the level of uncertainty about the future path of the economy and inflation, and MAS expects this uncertainty to persist. A wider policy band allows more room for market-determined movements in the Singapore dollar nominal effective exchange rate during the period of uncertainty. MAS can change the level at which the band is centered. This represents a more significant adjustment in monetary policy settings, which may be necessary if the outlook for growth and inflation changes abruptly and rapidly, and both are projected to have fundamentally shifted to a new path.